Good evening, traders, and welcome to exploit earnings season for max gains through futures. Can I please have a quick sound check? Just want to make sure that you guys can hear me. You guys can see the screen. All right. We're having a bit of a storm here in South Florida, and we're getting some really strong winds. Good evening, everyone. So happy that you guys are here because I am about to share a few secrets about earnings season. And it's right around the corner. It starts next week, actually. And guys, when earnings season hits the tape, the market does not behave normally. Stocks explode higher, others collapse in minutes. And futures have the tendency to move hundreds of points overnight or right before the market opens. And most traders get caught in the chaos. And there's a lot of stuff going around that if the price action goes fast too high, then we're going to short it. Look, if the market is screaming higher, for example, there is a reason for that. So don't get in front of price. Just follow the price and make price your best friend. And a lot of traders get caught, guys, in this chaotic market, in this chaos altogether. It's between price action, volatility, tape bombs, and basically market is reacting to news. It's a news-driven market. But here's the secret. Professional traders know something different because earnings season creates predictable volatility windows where massive opportunities appear for traders who know where to look. So tonight, we're going to begin by looking at the current state of the market to see where we're at right now in the structure of the market, to see where the price action may potentially move in the next direction of the market. So where the price action is likely to move in the near future, based 100% on technical analysis, no mumbo jumbos, okay? So we're going to look at the broader market environment. We're going to look at some key levels across the major indices and the geopolitical and macro forces that currently are driving volatility. Because if you guys know by now, or maybe you're newer at trading and you don't know, there are different volatility types. There is a volatility market where you barely have any participation into the market and the price action is getting manipulated very easily to the upside or to the downside, and can even be caught within a range with not much of a predictable pattern that develops from there. That is the hard volatility to trade. The perfect combo for volatility is when it comes in with volume. And this is what earnings season promises us. It promises volume back into the market. It has the tendency to bring investors back into the market. Because today we're going to talk about day trading, and we're going to talk about futures trading, which is I would say a lot more simplistic than stock trading. I do both. I have been doing both for over 25 years on the day trading side. And literally for over 35 years, I have been on the investor side, and I have been also on the swing trading side, 10 plus years in investment banking. So I worked for a hedge fund. So because before you exploit earnings season, we have to first understand the battlefield that we're trading in, the context. And if we do that, then we can have an appropriate approach to our trading, to our momentum. And then I'm going to show you how I exploit earnings season for max gains every single quarter, and how to position around the volatility and how to use these moves inside the power hour to generate income style trades. Because if you don't know, I only spend about an hour and a half in the market every single day. And in trades, ideally, I don't spend a lot of time because I'm going to share with you what I do and what I look for. I look for velocity. I look for patterns that are conducive towards a bigger move than any other types of momentum trades or any other types of patterns that a lot of other retail traders look at. So the fact that I have been on the institutional side, I have tried to redesign the same concept, but for retail trading, first and foremost for myself, because I quit my job like 25 years ago to get into day trading. That's what I did. I wanted to get into day. I can't believe it has been that much. Okay, it has been this long. And I needed a system for myself. And the fact that I'm sharing everything with you guys, that is literally, you know, unexpected. Okay, that is totally unexpected because it was never my plan to share my knowledge, to share my trades, or to share anything. So let's get started. Once again, my name is Anka Metcalf. I am the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest in the stock market and also into the futures market. And we're going to talk about futures here, how you can, you know, hedge with futures as well. I run a trading room since 2017, and since 2016, I finally designed a course for futures because I was sharing my ideas and sharing my trades with a small group of day traders. At the time, we were all pretty much into a Skype room, organized, let's say. We were like a handful of traders, and I had the privilege of being in contact with some really amazing traders. One of the traders that was in our group, and like I said, we had a very small group. One was an institutional trader, but was, again, just like me, from the institutional side, trying to get into the retail side through day trading. We had another amazing trader that had been day trading quite some time before we actually got started with day trading, and we learned a lot from that individual. He was actually one that was programming a lot of algorithms for a company that was New York, a trading company that had these high frequency trading computers in New Jersey. And as you know, New Jersey is a big hub for the stock market, for algorithmic stock market, and also for the futures market. And we learned a lot from him because he actually shared some of the secrets, some of the inside secrets of algorithms. So it was extremely beneficial because I was able to improve my technique even more. And I was able to manage the trades better because I know where these algorithms and how they react, what is the necessary volume for them to create follow through, what creates the momentum in the market, and so on and so forth. So not only from the technical side that you read in books, but also from the practical side. So that was so valuable. I specialize in high velocity trades. And just like I said, I'm going to share a little bit about what is a velocity trade when we look at some charts, because we are going to start with the state of the market to see where the market is at. And I will explain on the chart exactly what velocity is so you can understand it much better when you see the visual. And I'm also the designer because, like I've mentioned before, I took the institutional model and I applied it for day trading, which is kind of hard to do because when you're coming from macro timeframes, from really higher timeframes, from doing institutional investing where you hold positions for a really long period of time, when we talk about generational wealth and all that stuff, and to get into momentum trading where you would look at a 1 minute chart and you would go like, oh my God, you're freaking out because the chart pattern is the candlesticks are moving so fast. It is so different. And I have to say, even though I came with tons of experience in the market, literally trading and putting trades on with literally hundreds of millions of dollars in positions, to be able to trade my account, and you guys know how fast our accounts can go down if we're not respecting certain rules, certain management rules, position sizing rules, right? So when I took my first trade, definitely I understood the importance of position sizing, obviously. But let me tell you something, when I placed my first trade, literally my hand was shaking on the mouse. And at that time, when I was placing my first day trade, I had a very small risk. I think it was like $50 risk on that stock trade. So it was not a lot of money, but literally my hands were shaking. And it was like, when I took my first trade, it was like, oh my God, like I forget everything. Like you totally forget everything because everything is moving so fast. And I want to share something with you that I really hope you understand. When you learn how to day trade, you're going to be one of the best chartists and one of the best swing traders and investors there are. You guys are going to kick ass to any investor, to any fund manager, to any hedge fund out there. And I promise you this, because the knowledge that I had when I was working at a hedge fund doesn't compare to the experience that I have gained from day trading. Like it is 100x more. So if your objective is to generate income and take a portion of that income to transfer it into your medium-term accounts, for example, for swing trading, or long-term accounts towards investing, and especially if you add some dividend stocks that are going to start working for you over time, guys, you're going to have the best stocks, you're going to have the best indices, you're going to have the best commodities to invest in because you're going to understand the mechanics that are behind the bigger moves. Okay. So I'm the designer. I can't take credit for the system because I did not invent technical analysis, but I can say that I have a different approach to price support resistance because I look at price support resistance through 8 layers, through a lens that magnifies not only the linear support resistance, guys, that we are all aware that we are seeing on charts, the supply and demand areas, but another 7 layers. It's like peeling an onion. You can't miss a trade. You can't miss the direction. And I'm going to tell you something. One of the biggest problems that day traders have, and correct me if I'm wrong, is selecting the direction of their trade. Because day trading is so complex that you may see the daily higher, you may see the 15-minute lower, and then you're all confused. Which way is it going to go, right? All right, so also, specific trigger times. There are certain times throughout the day where these algorithms that trade, and by the way, more than 87% of the market, if not even more, represents algorithmic trading. So you have to embrace algorithmic trading, make algos your best friend, because they're the ones that are going to get you in the trade. And they're the ones that are going to lift the price for you or lower the price for you. That and institutional traders. And I'm not talking about traders that just manage, let's say, $500 million under their portfolio. Those are babies. I'm talking about billions of dollars that are infused into the market. Also, specific price zones. There are 4 specific price zones where algorithms trigger. So these specific price zones and algorithmic triggers are the ones that are powering the market. Okay. But in order for this to work, guess what you need? Can anybody take a wild guess what you need in order to have this trigger and this follow through? Anybody guess? You need to have volume, guys. You need to have volume in the market. And right now, investors are a little bit reluctant to the volume that currently exists into the market because the market likes certainty, and there is quite a lot of uncertainty in the market right now. Okay, so with that being said, chart synchronicity and divergency is very important because there are periods of times throughout the day even, or throughout weeks where you can witness relative strength or relative weakness into an index. The normal path for the, especially for the futures indices, but also for the market indices like the Q Spice, Diamonds, Russell, is pretty much to move in sync, right? Because it's a broader market sentiment and it's an average between all of the stocks under the umbrella of each index. And they move, for example, at the same pace, or if not at the same pace, at least into the same direction. But there are periods of time where you will see here in this presentation where they're divergent. So for example, you're going to see the Dow higher and NASDAQ lower. And this is happening, ladies and gentlemen, in earnings season. So before we actually get started, quick reminder that the information provided today by us, by TradeOutLoud, is for educational purpose only and should not be construed as investment advice regarding the sale or purchase of securities, options, futures, or any instrument of any kind. All right, so tonight we will begin with the state of the market. Then we will continue with everything that there is to share tonight about earnings. I plan on having this webinar for about an hour and 15 minutes with Q&As. And remember, Q&As are welcome if you want to keep your questions to the end of the presentation, or if you have a question right away, feel free to type it in the question in the question box. And of course, we're going to talk about what to expect this earnings season and how to create a game plan for the current earnings season, because this is not your normal earnings season. It's coming after a 5 and sometimes, let's say, 5 to 6 months of range bound market. So keep in mind, NASDAQ has been ranging since October. So we have November, December, January, February, March, and April. This is the beginning of April. So more than 5.5 months, like I said, almost 6 months. And we are still into the same levels that we were trading back in October. So how to predetermine entry stops and targets using technical analysis. This is what we're going to talk about a little bit into the state of the market. Does that sound fair, guys? Team, give me a 1 if that sounds fair. Okay, perfect. So we're going to start with the state of the market. Okay. And oops, here we go. Oh, where did it go? Oh, here it is. Okay. All right. Can you guys see the screen? All right. Perfect. Okay. So now that you guys can see the screen, we can talk business. And we're going to talk about the context, where the market is at right now. So I do have a chart here of NASDAQ, and we're going to take a look at 2 of these indices. We're going to take a look at NASDAQ because this is the tech rich index. And we're also going to take a look at the S&P 500, that is ES, right? So these 2 markets are going to pretty much give us the pulse of what's likely to happen, right? Okay, so let's start a technical analysis on the NASDAQ futures. And by the way, if you're new to futures, this is the June contract because we just rolled last month, a couple of weeks ago. All right, so we have the daily chart of NASDAQ. We are going to take a step back and we are going to take a look at the macro structure so we know how to tackle the short-term structure, right? We always start with a top-down approach to trading. All right, so there is no doubt about it that from the April lows, which was that liberation pullback that we had last year, we have had a massive uptrend, right? A massive uptrend. You can actually see the higher highs and the higher lows that determine this market reaction. And after that, after this peak higher in October, we had a pullback. We bounced back into the prior high zone. We pulled back halfway, then we levitated back throughout December into the same highs. January came, we were still unable to take out the prior high from October, but we levitated again into the highs. We had a slight pullback towards the end of January, and then we came back to retest the prior high here, prior higher zone, but we didn't actually make a new high or didn't really challenge the prior high. We just pivoted a little bit lower than the prior high that we had in October. We came back, we established support. We already had a double bottom support here that you see established on October 9th and also one on November 21st. And funny enough is that we had a double top formation here. The first top was on July 31st, and the second was on August 13th. Now, this resistance right here created the support for the October and the November lows. And shortly after, the market pulled back in February, testing the prior two zones right here, right? They were just testing. And then the market went into a really heavy chop block. And it literally was based for a very long period of time within a narrow range. We had the range, which was into the 24,500 all the way to the 25,200. That was a really tight range for a really long period of time for several weeks. One of the reasons why the market held into this area was because we had substantial support. It was also derived from a prior pivot high that created this area. It's called minor support. And minor support is only present in massive uptrends, okay? In massive uptrends. So the fact that the market is hovering here is showing us that the price action is robust, is holding, and it really wants to project higher. Never once I have ever thought that we're gonna start pulling back massively or that we're going to get some kind of a trend change at this moment. So there were a few reasons. Like I said, this high right here was holding the bottom. This is the November 2025 support. And then this is the chop block that I was mentioning earlier, okay? And you can see here that we were in this area for a quite long period of time, from February until we broke down here on March 26th. Here, you know, a lot of traders would say like, oh my gosh, I don't know what happened. It was the war. It was this, it was that. No, we had a war going on here. We had a war going on here and the market held. Here, we had the end of the quarter and balancing. This is what it was all about. And this is why when I shared this chart on social media, I immediately said, is this the peekaboo low, right? Because everybody knows what a peekaboo low is. Maybe you know it as a periscope low or a periscope high. It is where traders, investors, and I mean by traders, not me that I'm trading from home. I mean the heavy algorithms that are trading billions of dollars, okay? And this is what it was. It was a peekaboo low, beautiful rotation. The price action got back into the pattern. So nothing has changed. And in fact, if I zoom in, you will see that the price action right now is exactly where it was trading in February. It was exactly where it was trading in January. It is exactly where it was trading in December. It is exactly where it was trading in September of last year. Do you guys see it? I have my cursor here in September, right? If I, for example, trace a line, you will see the reaction. Okay, so this is the October and this is the September. Take a look. What did happen today? What happened today? We tested these levels right here throughout this line. This is like the average line. Okay. All right. So obviously, this was the end of the quarter. It's normal for price action to act like this. And if you're interested to find out more how to trade the end of the quarter, on our website, we have a tab where we have our blog, and we actually write about these events that are happening. So if you want to go there, it is TradeOutLoud.com. Go to the blog section and you will read an article that I wrote, I believe it was last year, how to trade the end of the quarter and exactly what happens. And it shows you, so you know next time when we're going to have an end of the month or when we're going to have an end of the quarter, what it means on a quarterly expiration or on a monthly expiration. You will see that these things are normal, expected, and you're not going to get freaked out when this is going to happen next. All right, so back when the price action was trading right here, end of March, we had two opportunities in two directions to go. We're either going to revisit minor support, and minor support is coming from a prior high from June of last year. You can see it right here. And we also had, so this is the pullback. And this would have meant like another almost 4 to 5% pullback. Or if we break above the base, so we rotated immediately, we came back into this market, and I want to zoom in a little bit more because you can see here that we have 1, 2, 3, 4, 5 candles right here. So this lasted a whole week, whole 5 days of indecision because we were at the bottom of the base. So here there were two opportunities again. Either we turn around, and if the price action would have gotten weaker and would have closed below 24,000, again, the close over 24,000, we would have went back probably here, right, into the prior support and then continue lower into the minor support. And the other option was to explode from this little mini breakout, explode higher. Now, this also came as a tape bomb last night, because last night was the ultimatum, right? It was Tuesday, 8 o'clock. It was the bridge and power plant day, right? And I quote this. So basically, because there was a ceasefire agreement, and this is a 2-week ceasefire agreement, and don't treat this as a resolution to the war. Both sides are buying time. And both sides are going to use this time for negotiation. So be very careful about the trades that you're placing, about the length of the trades that you're looking at, because things can happen and things can change very, very fast. And this is one of the reasons I love futures trading as well, because you have a hands-on action 24 hours. So if there is something that is going out right now, and if I don't want to be, for example, long in this trade, I just trail it or I simply exit the trade. I don't have to wait until the next day for the market to open in order to make that move. All right, to close the position or to add to a position. So as you can see now, the market has put up a massive move today. Massive move today. So it moved from a low of 24,355 to a high of 25,257 for today. It was an impressive move. And if you look throughout the chart, I also have something to add here. Notice that the biggest candles that we have in this structure are not really bearish, but are mostly bullish. Like we have one here, we have one here, we have one here with a continuation. So that shows us as traders and investors that this is something that we should look at as strength into the market. Okay. And then here we are back into resistance. Like I said, this level right here, just above 25,000 is still resistance. 25,000 to 25,300 is still resistance. Okay. So the more we break each day above the prior day's high, the more we are going to have that continuation into the top of the range. Now, remember, it's not pure technical, it's geopolitical related as well. So it is a news driven market, because if there is some sort of bombing going on, some sort of, something bad happens and this ceasefire agreement gets violated, things are going to happen super fast. Okay, things are going to happen super fast. Now, I want to scroll. I just want to shrink the chart a little bit more, because I want you guys to understand what phase we are in into the market. When the market is this strong from April through October, basically blasting, and it's not very common for the market to do this, because usually the markets move about 20% higher, pull back, and then they offer us another 10, 15, 20%, then pull back. Sometimes they offer 30%. So they do this in stages. So in other words, when we have a market, the market moves kind of like this. Okay. So it doesn't move like this, like grinding higher, moves like this. It pulls back, it moves, it pulls back, it moves, it pulls back, it moves. So all these pullbacks are very shallow in a dominant trend, and the continuation is super, super, super strong and blasting higher. So you can see that the size of the pullback is small here, and the size of the directional pattern is massive. Okay. And this is how it's done. And this is how the markets, if you back test what I've just said, if you look at the markets, you will see that that's the way the market moves. But basically here, like, look at this. We had a grind higher, no pullbacks. We had a little bit of volatility here. We had a volatility, we have some volatility here. So like here and here, we had a range bound grinding market here. So basically we went straight up from April lows to October highs. And this was impressive, because like I said, in this type of market, you're getting, let's say 20%, you're getting a pullback of, let's say 5%, you're getting 30% move here. Sorry, I really don't write that well with a mouse. And then let's say you're getting a 10% pullback here, and then you're having another, let's say 25% move right to the upside. This is the way the market moves. So it offers you multiple opportunities for the swings, right? Not here. Here you had to be at pretty much in April lows, and sell over here, which nobody does. So what we're into right now is this range bound market, right? Including this peakable low that we had here. Yeah, this is the peakable low. Okay. But the directional bias for the market is still up. Okay. So this is still bullish. Okay. Still a bullish market. Because when you come to think about it, this is the decision point. This is phase number 1. Then there is the accumulation phase. This is phase number 2. And this range bound market, because it's happening into the high, this is market cycle 3. Market cycle 3 usually attracts bullish momentum. So it's usually expected that if the price action breaks above the all-time high, and in this case, above this whole entire area, it's going to blast higher, like no doubt about it. Boom, it's just blasting higher. However, if it is breaking the lows right here, it will move lower. And you will say right now, oh yeah, but how about this peakable low? This peakable low is not a significance, because in order to have a downtrend, you need to have this peakable low the way it was right here, and then you needed to have a pullback where this November support now becomes resistance. Okay, not that hard. Okay, so you needed a price rejection here. So it did not happen. You can see where the price is at. Look at the price bubble is priced right back into the pattern. And then in order to have this downtrending momentum, so you needed to come here into, let me choose a different color, and let's choose black. So you have the red momentum here. You see it. We had to come into this area, break below the peakable low, and engage lower. This scenario, this is bearish. The scenario that we're in right now is bullish, incredibly bullish, very bullish. The fact that the market did not move based on war facts, based on a lot of news that came in, that is very strong. It didn't pull back on an unchanged rate from the FOMC. It did not. Okay. So keep it in mind, the next FOMC is end of April. It is the 3rd Wednesday of April. That's the next Fed decision. That's going to be very interesting. All right, so this is what we're seeing right now. So I just want to make sure that everybody's on the same page here, that yes, we are in a very bullish market. And I have a question. Thank you so much for asking. Linda, yes, the Qs, let me just bring the Qs are in the same situation. We have the April lows. We have the resistance from February that is translating into a lot of minor support. And not only that, but we are back into the pattern right here. We have a beautiful gap up that we have today. And we are stuck into the resistance areas, into that cluster that we have been into for a really long time. But this candle right here, ladies and gentlemen, is going to be very telling tomorrow. How many of you guys would like to hear what this candle can tell us? What this candle tells us actually about tomorrow's trading? You interested? You guys interested? And same applies for NASDAQ. That we're going to go to NASDAQ back. We're going to go back to NASDAQ in a few seconds. But for tomorrow, let me just get my cursor here. Okay, for tomorrow, okay, over 609.90, and this is for the Qs. I'm going to give you the levels for NASDAQ for the overnight and for tomorrow. Okay, 609.90 for the Qs. This is going to be bullish above. If you want to go bullish above, this is the area. So tomorrow morning when the market opens, and if you intend on day trading the Qs, anything that trades over 609.90 is bullish. Don't look back, okay? Now, keep in mind, you have to be prepared because you have to fasten your seatbelt because it's going to get turbulent. You're heading into a lot of resistance, and you can see these tops right here. All these tops carry a lot of resistance. So 613 is going to be your first target area. So make sure that you place your day trading targets a little bit lower than that. So I would say 612.80, 613, right? Or 613.20. Always place it a little bit below. That's what I do. And then we have another resistance here. We have a double top formation into the 617. Now, keep it in mind, this is like the last piece of the puzzle. These two resistance areas are the last piece of the puzzle, because if the price action is going to blast over these areas, it's going to go back into the all-time highs. And the fact that the market is holding so strong into earnings, it shows me that there is not a lot of, there is no devaluation for a recession. There is no, because we've heard the R word so many times in the media. And that's what I'm telling you guys. If you learn how to read the charts, you will be able to analyze the market. You will be able to see the current state of the market for yourself. You don't need to tune in to somebody else to explain you what's happening in the market. Is as easy as that. Okay, so this is the bullish scenario. The bearish scenario is that if the price action is going to take out 601.85, just below that, things are going to be bearish all the way to the 200 SMA location. And notice that we have some structure support in this location into the 594 area, because we have a pivot here, we have a pivot here, we have a pivot here, we have a pivot here. So that is going to be the area. Plus, we have a rising 200 simple moving average. Now, the price action has not been above since the 200 simple moving average since March 19th. This is a long time for the market. Okay, long time for the market. Okay, so bullish above, bearish below. And again, this should not be that hard to analyze. And remember, it is easier for the market to go higher than to go lower because it's trying to hold for earnings. All right, taking a little bit more time, but I hope you guys are enjoying the analysis. Type a 2 if you guys are enjoying the analysis, and I will get to the earnings in just a second. Okay. All right, so I'm going to give you, thanks so much, team. All right, you guys are great. Okay, so let me share with you some levels for tomorrow, okay, for the futures market, right? So today we had a pretty impressive move with a pretty impressive candle. And the reason why you see like a bigger candle today is because you have the overnight price action reflected in here. The Q's chart where we just analyzed, let me just go back in here, does not show the pre-market data, right? This is just a New York trading session data. But if I click on the New York trading, on the extended data where it includes overnight trading, you will see that we had this, this candle, this momentum as well. All right, so let's get back to our NASDAQ here. All right, here it is. Okay, so for tomorrow, basically we want to see this high taken out, the 25,257. We want it out. Okay. Now there's another trick that I look at, is basically where we closed, and you can see here that we closed. You see here. Okay. Let me just shrink it a little bit. Okay. So we closed at 25,030. This is a little bit higher. Is that 39? It doesn't matter. Just look at where it is. It closed at 25,030. Okay. This is where it closed. All right. So what can we make with this? And what are we going to, what's the takeaway from this information? Now, I want you guys to pay very close attention to this level right here, the 25,039, because if throughout the overnight, this level is going to hold, there's no doubt that tomorrow we are going to start taking out the 25,257. Okay. Even if we pull back a little bit, okay, even if we pull back a little bit, as long as the price action is above this red line, you see this red line right here, this is the daddy of all daddies, okay? This is the 200 simple moving average. You come at this level, you bounce. You come into this level, you bounce, okay? So this is the happening place. This is the ultra moving average support. And by the way, you're talking to someone that really doesn't love to have a lot of indicators on the chart. I don't. But sometimes we need to pay attention to these levels, because let me share something with you, like a secret. A lot of algorithms are lingering around and are paying very close attention and have buy orders at around, or sell orders at around the 200 simple moving average. When you're getting a pullback on the 4-hour or 1 hour into a 200 simple moving average, watch for a buy, especially in a strong dominant trend, because that's going to happen. Okay. Even here, like we had this slip down, and like I said, we know what this was. A lot of traders are saying, oh my gosh, this was news. This was the news. This was nothing else but balancing, portfolio balancing. And you could see here, end of the month balancing. You can see here the date. Okay. See here the date and look at the rotation here. Okay. So this is what's going to happen for tomorrow. However, if the price action is going to take out the low of today, which is right here, this can send the price into the scenario that we have discussed earlier when I took my markers out and I showed you what we need for a downtrend. Okay. But less likely that the market is going to slip into a downtrend now that we are literally days from earnings season. Okay. So this is what we're looking at. We're also looking at, for example, let's take a quick look at the 1 hour. Okay. I shared this on my X page, and I said that we have a bubble of air here all the way to the 10 EMA. All right, you can see here the 10 EMA. This is another algorithmic rich moving average. Okay, now here's the thing. When we look to the left-hand side of the chart, we can see that we have a prior pivot high that is resistance. And this resistance is translated into minor support. Okay, see what I wrote here? Minor support. It supports the upside because it is minor. Minor support is only in uptrending markets. Okay, so you can see here that we had this doji here, and we took the doji out and we pulled back into this resistance, and we developed some tails here. The tails from these candles are showing us that there were buyers present in that structure in that period of time that lifted the price higher. So in this circumstance where we see that we have an inside 4-hour bar, so it means that for 4 hours, the price was unable to take out this high or this low. This gave enough time for the 10 exponential moving average to catch up with price. Does that make sense, team? So now we have the resistance that is creating this minor support here, and we have the support from the rising 10 EMA. Anything that trades above the 10 EMA is into an ultra power momentum trend. So it sustains the upside. Okay. So because we have this congestion here, this inside bar momentum compression, it shows us that the price is likely to move in two directions. Number one, bullish above 25,131. So above this prior 4-hour bar. Okay. And the bear side is that if it breaks below 24,920, be very careful here, because the longer this price action is going to linger here, the more the 10 EMA is going to lift. And if we get the breakdown below the 10 EMA, we're going to fill this bubble of air. We're going to fill this bubble of air into the next support. Okay. Which is the next support that is coming from here. Okay. From this side. Okay. Okay. It doesn't work. Okay. Here it is. Okay. Bubble of air to the 10 EMA and into support. All right. So these are the two scenarios that can happen. I would entertain more the upside than the downside. The reason for that is because we have a trend going on. And I know it's the 4-hour, but it's pretty significant. We have the low, and we have the, where's the bubble? Okay. We have the higher low. And then again, we have another higher low and another higher low right here, right? That I'm not going to mention. And guys, if we hold this area and we break above 25,131, guess what? We're going to have another higher low into this area. So we have the bottom and 1, 2, 3 higher lows into the structure. I don't know how you guys, but this to me is literally showing extreme strength if the conditions are met. Okay. I use the 10 EMA on the 4-hour. So the pink line right here that you barely see is pink. The 21 SMA is blue, the 50 SMA is green, and the 200 SMA is red. Okay. All right, team. So let's get into our presentation. All right. So earnings season has a powerful impact on futures indices, especially in NASDAQ, the S&P, and the Dow. These futures track the broader equity indices and react strongly to the earnings results of major index components. So basically, the earnings season is the time when the market reveals its hand and the fundamentals are in play. And this is the normal way the market should move. It is, and I have to be very honest, because since the QE era. How many of you guys remember the QE era right after financial crisis that we had in 2008, 2007, 2008, right? We had the QE era. That is when the market began following news, reacting with tape bombs on news, reacting very violently to news, mostly news, less pullback zones. So it's where momentum starts, trends shift, and new leaders emerge. By the way, have you seen the price action that we had in Apple, we had in Google and Amazon? They're finally waking up now that we're seeing some signs of a possible agreement and the excitement of earnings season. Because during earnings season, you get more market moves. You get velocity moves. And I said that we're going to talk velocity. Velocity is the ease. Let me go back in here. Is the ease of price of transitioning into and generating follow through. So for example, in this pattern that we look at here, if we get the price over 25,131, price action is going to probably lead to 25,257. But from this level, the 257, because you can see here, we have another prior resistance into this point, very close by to this area right here. You basically don't have a lot of resistance. Let me go back to the daily. And you basically have this tradable void in here. When the market is reading voids like this, like room to run, not a lot of resistance to the left-hand side, right? So we have a little bit of a hiccup here into the 400, 500. But beyond this, do you guys see any structure here that will generate some kind of a hiccup? No. So the market is going to have velocity all the way to this prior high. So this is what velocity is, the ease of price of transitioning into the target, of achieving the target, of getting into the next resistance area. And once the resistance area is far distanced, that is when the price action is literally pushing the pedal to the metal. Okay, so that is the velocity moves. You're seeing more follow through because you don't have interruptions in the trend, you don't have interruptions into the direction, therefore the price action is following through. And that's what we want. When we initiate a trade, because we want follow through. We don't want to get 5 points out of the market or 10 points or 20 points. We need follow through to hit more targets, to achieve better risk to reward ratio. The return of volatility, and this is the good volatility, because with each earnings season, we have volume that is coming back into the market. We have investors. And these investors are going to move the market every single day. So for example, next week, we have Goldman Sachs that is going to report. Have you guys seen the move in Goldman Sachs? Wildfire today, okay? Over $900. Bank of America, all the financials have been moving higher, okay? Today, they all gapped up. They all want normalcy into the market. And remember, when we have financials on our side, we have the market on our side. Because if financials are in a crisis, and if there is, some sort of panic going on, the financials are getting hit hard. This is what happened in 2020. This is what happened in 2028. 2008, okay, 2008. What happened was like that panic and sell. But that was an easier environment to trade. I was talking about this with my traders in the trading room, and I was like, this environment is so hard to trade. This is not an easy environment. If you learn how to trade in this environment, you're going to be laughing for the rest of your trading career, because I personally have not seen an environment like this, difficult like this. 2020 was a breeze. 2008, it was fun. We would wake up every day. We would turn on our computers, just pop up the platform, and we were like, okay, what are we going to short today? Our best thing was Lehman Brothers. So we were like squeezing Lehman Brothers. We were taking it to the ground. But we were shorting financials because they were in a crisis. They were in a pickle. So we kept on shorting. It was easy. It was an easy environment because you had the direction. We went into the market and we started to short. Basically, everything was moving lower, right? All right. So you're getting the return of volatility. What another aspect is bigger price swings. So you're getting those 2 hours, 3 hours, 4 hours in a trade because you're getting what? You're getting follow through, right? So when you're getting follow through, you're getting bigger price swings. The market is boom, exploding or imploding, depending on the case. And for the astute trader, that means more money because now we're penning and nickeling or way into the market. Okay. We basically, yeah, exactly. That's what we want. We want follow through, right? We are not getting in a trade for the sake of pushing the button. It was like, okay, I'm in a trade right now. What now? Okay. No, we want follow through. And we want actually less time spent in front of the market. Have you guys seen, like, when we get in a trade, when we were in trades last week, when we were in trades the other, prior weeks and what so on, we were in those trades forever. Like it took forever, where the reality is that if you're a day trade, you should be in and out in less than 20 minutes, 15 to 20 minutes tops. And that's your day right there, 15 to 20 minutes. And less time spent in front of the market because you're going to take advantage of the institutional power moves that are happening in the first hour in the New York trading session. And we have strategies that we apply, good risk management, good stops that we apply at the open. The first 5 minutes are so important and are the most lucrative. Now, how earnings season impacts the futures indices. And you're going to go like, okay, but we're not trading stocks. Why are you talking about earnings season? Well, futures react on earnings, on stocks earnings, because let's think about it, right? Let's rewind a little bit. What did we just talk about? We talked about NASDAQ. Okay, so we talked about NASDAQ. We talked about the fact that NASDAQ is a tech-rich index, right? We also know that if companies like Apple or Google report earnings, they're going to impact NASDAQ in a very big way. Just as, for example, next week, we have the big financials that are going to open the earnings season, kick off earnings season, and we have Goldman Sachs, Bank of America, JP Morgan, etc. And they're going to impact the Dow. They're going to impact the S&P. So the futures market are open close to 24 hours of 5 days a week, actually 6 days a week. And when big earnings come from stocks like tech stocks or financial stocks, they are released either before the market opens or after the market closes. And futures respond instantly to those numbers. So you can imagine if you have 2 or 3 stocks that are reporting the same day, and I have an example for you guys in here tonight, boom, they're just going to explode or implode, right? So a positive earnings, the price means that the futures are going to move up, and a miss or weak guidance. So remember here, because not all earnings are positive. You could have a positive earning from a company, and you may not have the move up, because if they have weak guidance, you could have the move down. Weight of the components matter. So for example, NASDAQ is very sensitive to the MAX 7 stocks. Everybody knows that MAX 7 stocks have not really performed this year, right? But they're trying. Okay, so the MAX 7 stocks, for those of you that are new or have not traded stocks, are Microsoft, Nvidia, Apple, Google, Amazon, Meta, that's Facebook, and Tesla. And the S&P 500 stocks are the broad-based impacted by tech, financial, and healthcare. Have you noticed that when Eli Lilly comes up with product, or the FDA clears a product for, I don't know, Pfizer or whatever, you know, it has the tendency to move the market. Okay, so that's good. And the Dow, by blue chip stocks like JP Morgan, Bank of America, Home Depot, McDonald's. By the way, McDonald's is basing rather interestingly on the daily. Okay. And then you have earnings beats versus forward guidance, right? And a lot of futures traders do not take this into consideration, because I have a background, extensive background into stock trading. I could talk to you guys about this so you can have the upper edge on how you trade it, because you're not going to be from now on just your regular futures trader. You're now going to be an astute futures trader that knows how to look at the market in general and see what's impacting the futures, because some people have blinders and they go like, I'm only going to trade in mini S&P. And I'm like, why? Are you a market maker? Because then I would understand, but you're not a market maker. You're not a liquidity provider for the S&P. Why are you trading it? Because at that moment in time, there could be another setup in a different index. For example, in Russell, that is ignored and has a great margin requirement. It's much better than trading NASDAQ, right? A lot of people cannot afford to trade NASDAQ just because of the margin requirements, but you could trade Russell and it has really nice moves, okay? So futures are forward looking. So if earnings beat, but outlook is weak, the futures can start selling off. So what you should focus on a futures trader, well, first of all, key earnings dates. And that's not hard. I'm going to give you all the ins and outs and how to find them. So focus on mega cap stocks, bank earnings, and we're going to begin with bank earnings. Track earnings before and after the market. And it's not hard. Just pull up the chart and see how it did, because literally the price, you can actually ignore the results, the estimates. You can ignore, because they're going to be priced in the stock. They're going to be priced in the index itself, right? The reaction, not the news. So what I mean by that is that futures traders don't trade the earnings per se. They trade the market reaction. They trade the certain stock reaction or group of stock reaction to the market, how it impacts the index. And watch how NASDAQ and the S&P behave pre-market to those earnings. Because when the market opens, guess what? If they have relative strength, they're going to just continue to blast higher within the first hour, hour and a half. And then boop, done, right? So we're going to look at 10:30, quarter to 11, and then poof, done. And then they're getting ready for the big investors are going to, you know, call it quits, meaning like algorithms. And then they're going to take a break. They're going to go on a break. Okay. Write the momentum depending on volume and structure. So the volume is very important. Okay. Earnings calendar. This is the earnings calendar for next week. As you can see, on Monday, we have Goldman Sachs. On Tuesday, we have JP Morgan. We also have Johnson & Johnson, but we're talking about financials. We have JP Morgan and Citi. Okay. We have Morgan Stanley and Bank of America on Wednesday. Okay. And we have Charles Schwab. That is on Thursday. We have Ally. That is on Friday. You can see here the majority of stocks here are trading before the market opens. So not trading, but they're, and Wells Fargo, I forgot to mention, they're reporting before the market opens. Right before the market opens. And by the way, next week we also have our first tech stock, big powerful tech stock. And you guys know, if you haven't looked at a chart, Netflix is very bullish, very bullish. So Netflix is going to kick off the NASDAQ side of things, right? So this is mostly S&P, this is mostly Dow that we're going to pay attention to. This is after the close with Netflix. All right, so I want to show you this graph, and this represents earnings season and earning a report by week. Basically, we are here somewhere right now. Okay, we are here. 5% of the companies are going to report next week, and we're going to go crescendo. And week 3, we're going to have 39% of the companies that have already that have reported this week. So 39 plus 15 plus 7 plus 5. That's a huge number of companies. More than half of the companies have already reported by week 3. And then we're going downhill from there. We have 22 and then 4, 4, 4, 3. You guys know what this means right here, that we're getting really close towards the end of the quarter, right? Where a lot of things are happening, quadruple witch option expiration, window dressing, and all those phenomena. So how to trade futures during the earnings season. First of all, avoid trading before big announcements. You don't want to get caught, right? So don't enter positions before the market opens. Wait until the market opens and then analyze the market and then get in. Wait for the dust to settle and trade the second wave, and that is the second reaction. Okay, the second reaction is always the most important. Use overnight session. Take advantage of the overnight volatility in the futures after major earnings releases, right? So watch for overnight ranges, setups, anything that you can see. I give you a quick glimpse of the analysis that I do. If you would like to match that, that would be perfect. It's going to give you a great insight of what you can expect, whether continuation or not. And also trade the indices with the most exposure. Okay? Trade the indices. Because when you trade the indices with the most exposure, you're likely to mimic the move of the stock. Okay? Map out the technical zones on the chart. You see, you saw how I plot my chart. So I have a really good visual of what's going to happen. Use the 1 minute to 15-minute chart during the power hour. And I usually look at the 1 minute and the 2 minute, the correlation between the two, and trade those two between about 9:30 and very close to 10 o'clock. And from 10 o'clock, I shift to the 5 minute completely and the 15-minute around 10:15. I use the 21 simple SMA, 10 EMA, and pivot points to frame my trades and actually create my game plan. If you have been in my trading room or my open houses, you know how I work and you know the work that I do on the charts. So pro tips, watch the first 15-minute range of the day. That is so important. Also watch to see if they're putting a low or if they're putting a low or a top around 10 o'clock, because if the price is going to be very close to the 10 o'clock area, whether it's up or down, that's going to give you a really great indication on whether the market wants to hold or not. Track earnings sentiment across the week, and also cluster days when you have multiple top names that are reporting, right? Like, and I gave you an example with Microsoft, with Amazon, and I believe it was Google that reported on the same day. Watch those days very carefully because those are going to be power pack days. Tools that you can use, obviously look at your earnings calendar. You could get it from Earnings Whispers. You could get it from Earnings Hub. The one that I showed you is from Earnings Hub. It is free. You can use NASDAQ or FinViz. They all have calendars, earnings calendars. Your platform, I use Thinkorswim. You can use that one as well. It's great to track news as well. And also use the volatility monitor, right? And I'm talking about the VIX. Okay, so let's go back in here and let's talk about the VIX a little bit, right? What is VIX? VIX is the fear factor. Let me just show you how I have this pre-mapped. So this is the August 2024 high, extreme volatility here. It took the price all the way to 65, over $65. Then we had the April high in here that took the price over $45.60. And then it calmed down, and you could see here from April 2025 all the way here. So we were just hovering. We have some minor resistance here from these highs from December 2024 and March 2025. And here we had a revisit into the October. This is the peak from October 2025 and November 2025, hence the range bound market. We had a volatility spike in here into March 10th, March 9th of 2026. And then we came back in here. So this is basically all March. Okay, this is all March. And there's nothing else than revisiting the November, October minor resistance right here and the December 2024. These are levels that we have been into. The panic area is over 32. When you see 32 and the price action continuing higher, this is the problem right here. If they reside above 32, they're going to start moving higher. A VIX higher, market lower is the teeter-totter effect. It moves up, it moves in the opposite direction. I also want to bring here something like oil. Okay, so this is oil futures. Okay, you can look at USO if you would like to track that, but because I'm a futures day trader, I track and swing trader as well. I track oil. Okay, and I posted these levels yesterday, and I posted some other levels about 2 weeks ago, and they play to the T. Okay, they play to the T. However, they played to the T, but I did not participate in these trades. Do you guys want to know why? Because I don't trade panic. I don't trade news. I don't trade extreme volatility at all. I sit back and watch and see price action unfold as if I'm watching a movie. Well, let me explain something. Back here, I have a post on X where I talked about this range over here. And I said, if it breaks above, it's going to continue higher. And if it breaks below, it may go lower. Okay, it may go lower. We have the 20 SMA right here, and I've mentioned it. If I would have, and then again, yes, it could potentially go lower all the way to about $69. This was my target. I didn't do it. The reason for that is because any headline, this is a headline driven commodity right now. Any kind of headline would have impacted the price. And even when you're sleeping, you could have stopped out easily. Or if you're having any kind of panic buy or panic sell, it could literally keep you in the trade. So that means that you would have like really awful results, right? You would still be in the trade. Your stops may not hold. So there are a lot of things that may happen. So let's say, for example, here, because I plotted this and I said, if it breaks below, it's going to be a downtrend. Did it break below? Yes. Was it a breakdown? I didn't say downtrend, a breakdown. So was this a breakdown? Yes, it is a breakdown, right? It is a breakdown, but without follow through, right? Because you're still in the pattern. You're still in this uptrend. And then again here, we were in the trading where we're looking at this every single day. And I'm like, okay, this is an inside bar. If this gets rotation, we're going to send the price is going to be sent right here. Some traders may stomach this. I don't. Okay. So you could have made a pretty penny here. Okay. Pretty penny here. But this is one of the things that I wanted to draw attention, and you should watch this when you're trading, especially the indices, right? And watch it on a smaller time frame. Watch it, for example, on a 5-minute. So if you're trading a 5-minute chart, watch the 5-minute. When oil is making some red bars, you're going to see that the market is putting up some green bars. It acts like the VIX, okay? So this is the reason why I set this here. Monitor the VIX and monitor crude oil, because it is a headline trade. All right, now let's get back into earnings. We're going to go a little bit past this 8:15, probably for another 10 minutes or so. So you can see the earning report here. Wells Fargo reported. This was before the market opened. You can see here, boom, boom, boom. The white highlighted area represents the New York trading session. The gray represents the overnight session. So it reported very early in the morning. You're going to see that the price went lower. Guess what else went lower? S&P. S&P went lower. This is the low side of the mini S&P. So it's so predictable. You can see that we have support level here. It went right into support, right? Okay. Netflix earnings, right? Netflix reported after the market closed, went lower in the overnight. So you can imagine the gap down that it had, right? and the new trading session continue. Let's take a look at NASDAQ's reaction. And remember, Netflix will report next week. So here's the reaction. Dum, 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 lower. So it's so easy when you have a gauge, right? Because when you're trading stocks, for example, you're looking for stocks that have relative strength in comparison to the market, or that have relative weakness in comparison to the market. But by market, I mean the Qs, the SPYs, diamonds, and Russell. So if you're trading Apple, for example, you want to make sure that it's trading in sync with the Qs, or it's stronger than the Qs, in which case, if you're long, that's the best case scenario because you want it to continue higher. However, if it is, sorry about that. Okay, so if it is weaker in a strong market environment, you're not going to be trading it because you want to be in sync with some sort of market. So you can see how easy it is when you have a gauge, right? So you have something to compare it to, but when you're trading the futures indices, you have nothing to compare it to, right? But when earnings season comes, yeah, you can compare it to this stock because the market is going to react to the stock that is reporting. Here's another example with Netflix here. Okay, so we had the move down. This is the New York trading session open, and it's a 15-minute chart, boom, 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 right? And you have NASDAQ here, same follow through lower. Okay, so it's easy to trade because if Netflix stocks at earnings, right? Boom, and it's getting hit hard. Of course, NASDAQ is going to follow. It's part of NASDAQ. Take a look at IBM. And by the way, these were on the same day. You have IBM that reported earnings, right? And the move higher, pull back and move higher. And you had the Dow mimic the earnings, right? You have the same 2-3 bars up, pull back, and then gradually moving higher, right? So you have a mimic carbon copy reaction into the index. So very few traders know that you can trade the stocks through futures and take full advantage of the big price swings. And you could also take advantage in the futures market, not only through the full size futures index, which is pretty heavy right now, and it has a margin requirement that is pretty large for some accounts. You could trade micros. Micros are 10 to the size full size contract, which is perfect, right? All right, so this is the S&P holding. You can see here, the pieces. And when, for example, NVIDIA reports, NVIDIA is 8% of the S&P, 8% of the S&P. That's huge. You have 6.8% in Apple. Yes, the S&P is going to react as well. 6.7 in Microsoft, piece of the S&P. Little slice of Alphabet here. You have a 4.8. You have I was going to say Alexa. You have Amazon with 3.8, right? So you have a lot. You have Meta right here. You have Tesla. You have JP Morgan, etc. Okay, so they're going to react. This is the reason why I said that when financials are reporting, they're going to have a bigger impact in the Dow than the S&P. So watch that next week. Because as you know, these are the markets. These are the indices, the Dow, the S&P, NASDAQ, and Russell, and they have tons of stocks under them. Russell has 2,000, NASDAQ 100, the S&P 500, and the Dow 30. So when you have some earnings, for example, in the Dow, like American Express with the JP Morgan and what have you, report the same day. And if they're in sync, oftentimes they are, if they're in sync with their earnings report, the Dow is going to go either higher or lower. They're going to mimic the stocks. So now you can sync your index. You could sync, the stocks that are under an index within the index. So that is so cool. Okay, so remember, you need to have the checklist. You need to have the release report, the releases, the earnings releases, trace your levels before the releases are out. Watch NASDAQ. If NASDAQ stocks report, and you know the drill, financial stocks report, you're watching YM. Okay, and then, okay, here we go. All right, then for example, this is another example of Netflix to the upside because I've had some bearish examples. Boom, Netflix reported earnings, screaming higher. You're getting, and by the way, this is the overnight. basing in the, it reported after the market closed, based overnight. Pre-position, guys, pre-position, you can take a little piece, swing it. Take a look at this swing right here. Fabulous. Okay, I'm just showing you tons of examples here through different earning seasons. Here is NASDAQ, here's Netflix again, Netflix down, NASDAQ down. Predictable. This is when we had Google, Amazon, Microsoft reports the same day. Move up in Google, move up in Amazon, move up in Microsoft. Obviously, look at the same power bar. This is called a power bar, igniting, boom, power bar, beautiful, moving higher. It's so predictable. So now you guys are so ready for earnings season, right? Are you guys ready? Type a 3 in the chat box. You guys are ready. All right. Or type in ready. Okay. Because now you have a gauge. Okay. Now you can see, it's like, okay, I'm looking through a different lens into the market, right? So here is the Dow, here is NASDAQ. This is the same day, guys. Same day. On the same day, Walmart reports, and we have the Dow higher. Crazy. And guess what? We had Apple that reported. By the way, Apple's still part of the Dow. Okay. And no, Apple reacted along with NASDAQ. So Apple moving down, NASDAQ moving down. And on the same day, we have Walmart delivering really good earnings, taking the Dow higher on the same day. So that's why I'm telling you guys, synchronicity and divergency are very important. So what to look for? Trend, bias, support resistance levels, trace them, time frames, they need to be in sync, plot the ESTR. That's the entry to stop, the target, and the risk, always position size. Try to determine the entry based on the chart time frame that is providing you the most information. Because sometimes you're going to have junk on the 1 minute and the 2 minute, but the 15 minutes, like, wow, that's a doji or that's a pullback. Okay. Or, you know, some kind of other information. So shift through time frames until you see that perfect entry, because sometimes it's not evident on a time frame and it's evident on another. Always place the stops, wait for the trigger, and have a trailing method in place that enables you to stay in the trade as long as the price action is moving in your way. And knowing all this is really going to offer you a lot of peace of mind. Now, I have a special offer for you guys. We have a 90-day Power Income Futures Masterclass that is starting on May 4th. So it's less than a month away. But here's the catch. If you sign up now, you're going to get a 1 month extra in the trading room with me. And you're going to start earning season on Monday, knowing how to trade it before you even dive into the course. So how crazy pants is that? You're going to actually be able to make the money back that you paid for the course before you even start the course. You're also going to get 1 live mentoring and implementation session, because after we teach the course, we teach you how to implement and trace institutional levels. This is so important. What you have seen now is just the peak of the iceberg. There is so much structure that goes into the trades, and it's so super simple. It's just some lines on the chart. Now, the course, basically, you're going to be getting 15 on-demand lessons. And these lessons are going to be delivered to you for 3 weeks, from Monday through Friday at noon. They're going to be delivered at noon. These on-demand classes last for about an hour and a half, sometimes 2 hours, depending on what we tackle. Obviously, the technical analysis chapters are a little bit bigger because there's a lot of information in there. So they're going to be a little longer, but they're literally bite-sized pieces. So they're actually shorter than what we have discussed in here, and they're power packed. And if you think that you have learned stuff from today's session, oh my gosh, this is literally 0.00001 comparison to what we teach you in the course. And we also have the live trading room access, which is going to be literally for 90 days. So it's going to be 3 months. Plus, if you sign up Sorry about that. I have a reminder that I have to get to, and that keeps on coming on my phone. So basically, you're going to be with me not for 3 months, but for 4 months. And it is insane, guys, how much you're going to learn with us in the room. So you're going to get unlimited lifetime access to the Power Income Futures trading course. You're going to get the manual, which is manual plus on-demand recordings. You're going to get the live coaching sessions. And by the way, guys, these are yours to keep forever. So we're not going to take them away from you, because there are some classes that you take and they allow you to participate in them for 3 months or 6 months tops, or sometimes a year, and they take them away from you. I don't think that's fair, because trading is like fine wine, you know, it needs to sit, and you need to go back and repeat the classes. And literally there are nuances in the course that I have traders that took the course, let's say 5 years ago or 6 years ago or 7 years ago, and they're revisiting the course right now. And they're like, we're constantly having aha moments, because you discover new nuances, because it is impossible. Like, I know your brain is like a sponge, it's going to absorb everything. But the first time around when you take the course, you're going to absorb probably about 20 to 25%. And then the next time when you're going to take the course and repeat, then you're going to absorb another 15 to 20%. And it takes time before you absorb everything, because I have literally poured my heart and soul into this course, and it is so valuable and so insanely done that it's going to blow your mind away. Plus, you're going to get access, and you're going to be talking to me. So basically, we're going to have 90 days in which we're going to be together. And not only that, but we're always going to keep the connection, right? I'm not going to cut you off and say, oh my gosh, you know, you don't have access to the course anymore. You can't ask me questions. You're always going to get the student personal support. You're getting it every single day for 3 months, which is priceless. You're also going to get the platform layout. I'm going to show you what kind of layout you need to have on your platform, so you don't toggle charts, you don't look for anything else, so you have everything all laid out, and all you have to do is sit, chill, relax, and be on autopilot, just your hand on the mouse here and there to place a buy limit order or a sell limit order. Nothing is on impulse. Everything is established well before. As I have explained when we did the state of the market, when we went through charts, and I explained what we are expected to have into the market. You're also going to get, and this is, guys, this is so valuable. You're going to get an enhanced risk position size and auto R calculator. So you're in control of your consistency, and you're in control of growing your account, literally growing your account. Total value of the course is over 36,000. And I didn't say it. Our students are saying this is the only place where you learn how to trade like a pro. And as you earn, and basically you earn trading with us live every single day in the trading room. And if you want to start your trading journey, I'm going to give you the link in a second. You also have installments available. So once you check, click the buy now button, it's going to take you to PayPal interface, and you just go to pay later, or you scan this QR code and you're immediately there. This is the page. I'm going to give it to you in just a second. Here it is. Okay. All right. So basically here, I'm explaining what the course is and how it works. This is based on the powerful 90-day rule. So the course is designed to help you develop trading habits that stick. Because if you come with bad trading habits, we're going to take those away from you. Okay, you're done. You're going to stick to good trading habits. If you have never traded before, that's amazing, because you don't come with these habits. So we don't have to untrain you of things that don't work in the market. So in just 21 days, you'll build a solid trading routine. And by day 90, trading profitability would become a permanent lifestyle shift. You're going to be here in the trading room. I'm here with you guys. I'm going to call the trades, follow along. You do your work with tracing the levels. That's so important to make sure that when you're flying solo, you know what to do. And again, this is one of a kind system that has taken literally thousands of traders, many with little to no experience, from beginners to pro traders in 90 days. And I'm not just saying that. You can come into the trading room every single day if you want, and you could talk to these people live. This is the best, best of the best. Okay, so what I'm trying to say here is that with this course, you will not only learn how to master the market, you will never be into the position of not knowing in which direction the market moves. You will never be in that situation. You will always be in control. So what we teach here is, and by the way, this is the link that, oh, thanks so much. Thanks, Carla. Okay, Carla just signed up. Okay, congratulations. My team is going to send you the welcome email. So basically here is where we teach you, and okay, everything that there is to know about futures trading. And by that, I mean, you won't need another book. You won't need another webinar. You won't need another class ever. Okay, because we will be handling everything for you. Okay, we will actually be handling literally everything. Some of the things that we didn't put everything down here, but some of the things that we teach you, first of all, this is one of the most important pieces, so valuable, because we explain algorithmic trading here. We explain a lot of things about rollovers and about option expiration and the impact of option expiration into futures trading, especially into futures trading. So many things in here that literally a lot of the traders have no idea exist. Okay, no idea. Especially futures trader. We talk about charting tools and indicators and the ones that we need to pay attention to and we need to focus on. We also talk about the market cycles. When is the optimum time to buy? We talked about it in the beginning of the course when we talked about the state of the market, and there's no doubt that when you see a chart, you will know exactly which direction you need to be. And it's simple, it comes effortless, you're just looking at it. There are a few things that you need to look at, a few things on your checklist you need to have in order to pick that direction for you and know exactly when to go long and when to go short, which is literally 80% of the battle. And also market trends, right? Everybody can probably read an uptrend or a downtrend or use some trend lines or some moving averages to determine the directional bias. However, very few know how to identify an early market change in the trend. Okay, so really hard to determine the change in the trend. Everybody's a hero when the market is going up. Everybody's a hero when the market is going down. But when the trend is changing, everybody loses money. We actually own our own prop firm that we have available for our traders, and we're actually going to make it available for everybody. I think as soon as next week or in a couple of weeks, it's going to be out. So we love to fund traders, and we want to see them succeed, and we're giving them all the tools. We have another class on trading timeframes because they're not all created equal. And we have the multi-time frame fusion, which allows you to read the charts through the perspective of let's say a magnifying glass. And you're going to be able to read not only direction, but you're going to be able to read which time frame to trade at certain time. We'll also talk about the anatomy of the trade, how to calculate entries, because most of the traders out there, they buy support and short resistance. It's sad, but that's what they do. They don't have a clear guideline of a precise price that need to buy. They have no idea what a trigger is. They think the trigger is on support or resistance. And they're wondering, why am I losing money? That's the reason why. And we're going to show you my track performance and how much money I made this year. We have a track performance on our website as well. And I started tracking this since 2017, I believe, or 16, since we came up, we formed the trading room. We created the trading room because not a lot of people are showing their track records. A lot of traders are literally cheating themselves, and they're saying, oh, I don't need a track record. You need one. You need a journal, because if you don't have a journal, and by the way, let me tell you, a journal is your self-analysis, your trading analysis, how you perform. We also talk about the market tempo, proprietary day trading reactionary times. So we know exactly when to go long, when to go short. This is aside from technical analysis. This is proprietary to us, trigger times. These are proprietary trigger times for the New York trading session. So I know exactly when I'm putting my money, when I'm putting my limit order in, not only based on the strategy or the market tempo, but I'm adding the trigger times. We also teach you 10 proprietary trading strategies that you can use for day trading and for swing trading, because we also have a swing trading course that is attached to this one if you decide to opt for that version. We teach you technical analysis. This is just very little of what we teach over here. We teach you money management, which is unbelievable. We teach you everything from risk management to risk tolerance to position sizing and why is it important, and how you can double, triple, or quadruple your account each year, because it's super easy. It's super easy. Can you imagine in this market environment, how many times have you grown your account? How many Rs did you make this year? How many Rs did you make this year? Are you working towards your goal to doubling, tripling your account? We are on track. We are on track to tripling the account. And it's March and it's April in a very choppy market. We teach you trading psychology. This is a huge chapter. We're going to give you the trading journal. We're going to give it to you. Okay. It's called the TradeOutLoud prop firm. Yeah, it's called the TradeOutLoud prop firm. Currently we have it just for our traders, our students, but it's going to be for everybody else in a week or a couple of weeks. We're going to give you the trading action plan. This is going to be a minute by minute by minute sheet where you basically are going to we're going to show you what you need to do before the market opens and after the market closes, minute by minute. Okay, market opens, this is what you're going to expect at. And I'm going to take you I'm not going to take you through the prop work from, let's say, from 9 o'clock, but I'm going to take you through 9:30 in this example right now. So 9:30, the market opens. At 9:31, this is what you're going to expect. At 9:32, this is what you expect. This is what you need to watch. At 9:35, this is what you expect. This is what you need to watch. At, let's say, 9:45, this is what you expect. These are the time frames that you need to watch. This is the price action reaction. Pay attention to this, and that. So it's a structured approach. Plus, I give you my trading plan. How many traders out there provide you with a trading plan? Say, oh, here's my trading plan. I don't know of any, because every single educator out there is telling you that you need to have a trading plan. However, they say your trading plan is as unique as you. You need to create your own trading plan because everybody's different. Now, here's the thing. When I started trading, I didn't care what trading plan I'm following. I wanted a winning trading plan. And I was very, very lucky that I had fabulous mentors. I had great teachers. I've done tons of courses that have helped me. But what had really propelled my trading was a mentoring session. Was not one, but it was like tens of mentoring sessions that I had with a Goldman Sachs institutional trader. I was very fortunate. But I was in the position to accelerate my trading because of that. And I was able to have a glimpse into the trading plan of a professional trader. And that was huge. That was huge. Also, we're going to teach you the power of levels. This is what we do live with you guys after the course. This is the tracing and trading institutional levels. And again, this is a lot of this is from my own personal experience with my mentor. And then also live, we're going to put everything together. Okay. So again, if you want to join, this is it. Prices are going to go up. So I'm just saying, okay. I don't want to, say anything else about the prices are going to go up. And also here are a lot of, and these are all our students in here. And of course, if you would like, okay. If you would like, you can jump into the room. 95% of the traders in my trading room are students. Okay. All right. So, also one last offer for you guys. We have a swing trading offer for you. This one right here. When you buy the day trading course, that's right, Martin. Yeah. When you buy the day trading course, you have the option to opt for the futures, swing trading, and active investing course, which together bundled up are $79.96. This course alone on our website is $5,995. I believe that's the price on it. So if you are interested in only swing trading, boom, you get it from there. Okay, but you're going to pay a lot more. So you have the option to bundle up. Now, for those of you that say, hey, you know what? I'm not ready yet. And that's fine because this course is not for everybody. It's not for everybody. It's for traders that are really ready to take the step to accelerate. And if you say, you know what, I really am not ready, but I would like to join the trading room. I would like to see you trade, because here's the thing. If you lose on a trade, it's all my fault, right? Because you're taking my trades. Show me a trader out there that says, copy my trades. Show me a trader that says, copy my trades. To have the balls, to have the guts to say, copy my trades. None of them. Oh, design your own trade. I'm going to give you some levels, what we're watching. Create your own plan. Create your own trade from this. Okay. Yeah, I'm going to show you Roland. Okay. So if you're interested in this, go right ahead. So here, when you want to purchase the course, you can decide pay later. Okay, so you click on this and you, if you're in the US, this should work for you. Okay, let's talk about year-to-date results. Okay, year-to-date results. Okay, these are all trades that were taken in the trading room, and traders that are with me in the trading room. Okay, you're in Europe. Yeah, it's not going to work. Yeah. So all the traders that are in the trading room have similar results. Okay, this is based on a $5,000 risk per trade. This is, I trade a little bit more than that. I have a higher risk tolerance for the market and a higher R for the market for my account. I have not raised this, so I left it at $5,000 risk per trade, which is pretty common for a futures trader. This is considered like a medium-sized account. And these are the R's that were generated, because when you take a trade, it's not how much money you made in the trade, but it's about how many R's, the risk to reward ratio. And if you look at the market, for example, we talked about the market, and especially, let's say, I don't know, I'm going to bring NASDAQ because we discussed NASDAQ. Okay. And here it is. This is the daily. Okay. Here's the daily. So you could see here that this has been a quite difficult period to trade because of the chop, right? So it was one day up, no follow through, down. One day up, no follow through, down. One day up, no follow through, down. So it was back and forth action. So bottom line is that when you look at this results, year to date, we made 20 R's. Okay, we made 20 R's. Realized profit, and this is on a $5,000 risk per trade. Now, I know a lot of you guys trade even more than that, especially those of you guys that are trading prop accounts, right? And we have prop accounts. We have a very different prop account firm. The way we designed it is not to have a membership, but we pay, you pay a one-time fee and you get access to a simulated account in which you prove that you can trade, and then we finance you, and then we fund you. Okay, then we fund you. So year to date, $8,000, 20 R's. Anybody in here know how many R's you need to double your account? Jay, how many R's do you need to double your account? Do you know? All right, Roland knows the answer. Okay, you need 2 R's per week. Anything that is above 2 R's, but 2 R's per week is going to get you to doubling your account. Okay, so this is pretty fabulous right here. In this market, I have a lot of friends that are brokers, and they tell me some really sad stories about traders that are blowing and have blown accounts this year. Record blown accounts this year. That's because they don't position size. They don't look at the market in the sense of risk to reward. They trade in choppy markets. All right. So if you guys are interested, the link is right here. Okay. All right. So feel free. All right. Just reading through the questions in here. So feel free to ask questions, guys. More than happy to answer your questions. All right, let's see. The trading room hours and the way the course is designed in the trading room. Okay. That's awesome. Thank you. So we trade from 9:30 from about till about 11:30. Days that are slow, I give a lot of lectures, even though I don't have to, because the trading room is just for trading. It's not designed to educate you and to teach you how to trade, but I explained everything. Okay. All right. Mimi, I just explained that. You have to watch the recording. Okay, so thanks so much, everybody that participated. Okay, one more question. Okay, so if you purchase today, you will automatically join the trading room starting with tomorrow. So if you join tonight, you will have access to the trading room starting tomorrow. You join tomorrow, you will have access from Friday. Basically, you will have instant access to the trading room. So that's going to be perfect because Monday earnings season starts, and that's fantastic because we get to, yeah, we get to trade earnings season together. Oh, thank you so much. Thank you, Mark. Thank you, Randy. Thanks, Chanel. Thanks so much. Thanks so much. Thanks, Juan. Okay, so thanks so much, everybody, for participating. I'm looking forward to seeing you in the course and, of course, seeing you in the trading room. Good night, everybody.